All right. Think we're live. Okay. So I'm just going to do a quick stream here. Okay. And then I got to mute everything else on here. First live stream that I've done so far. I figured I would just do some sort of a live recap. Normally I do a daily recap of the day's price delivery, just for my own study so that I can go through the things that I was seeing, maybe some of the things that I missed on the NQ futures. I did trade ES yesterday as well, but I'm just going to go through kind of what I'm seeing. Really, these are just exclusively for my own study. And if you're watching and you find this helpful, consider subscribing because I am going to be doing this on a regular basis. But like I said, these are more so like a personal journal for me to get my thoughts out. And I truly believe that thinking about things is not enough. You need to talk about them to solidify those thoughts, similar to writing things down. And this is something that has been helping me. So I figured I would just share it on live stream regularly. So without further ado, we are on the NASDAQ and we are going over the January 16th, 2026 Friday delivery. So I'm going to go to the daily chart. It does look like we have been squeezing and we've continued this trapped order flow. As you can see, we're kind of coiling up here. I was hoping that we would have blasted higher, but we ended up having a sell-off on Friday. I think a lot of people were hoping that we were going to go higher. So one of the areas that we've all, I guess when I say we all, most people online have been interested in, especially if you trade ICT concepts, is these stacked equal highs and this daily PD array that we've failed to tap into consistently over the past like couple weeks. We have this area 26133 and a half. And that would be an area that I would like to eventually see be tapped into, and all of the liquidity above these relative equal highs to be taken. Now, with that being said, we do have a volume imbalance here on the daily as well. Now, what I just did there was I hit the bottom right set versus not set on TradingView, just so you know why that wasn't there previously. This changes the open and close times of the candles, but I use it in an ICT format to see where the volume imbalances lie. Another thing that I've been monitoring is this daily suspension block, like so. And I think we're going to go down to kind of cycle down through the time frames here. All right, we got our 4 hour. If you're not used to TradingView, the time frame is right up here. I do have all these indicators on. These are all indicators that I have programmed myself, with the exception of this IFEG one. This was programmed from a friend of mine and did an amazing job on this. Actually, it works very well, especially for high time frame. Okay, so we're on the 4 hour here. Price ended up coming down. I'm not going to do like market replay on this. I'm mostly just going through and kind of like assessing what I'm seeing in the charts after the fact. Just good for my own study. So I do see we came down to this 4 hour order block and then we ended up bouncing. We'll go down to the 1 hour. Okay, so coming into the morning was a little bit iffy. The reason I was thinking that we were going to be bullish is because we did have this closure above this 1400 Thursday the 15th imbalance that we ripped lower, and we had tapped into an equilibrium here and bounced. So this showed good momentum, in my opinion, and I thought that we would be on the right side of the curve. And technically, the right side of the curve is still valid. We've never taken out this low yet. So if we were looking at this from a market maker model perspective, we still have a higher time frame market maker buy model in play. And then we also have all these internal models, right? So in here, this candle is the buy side of the curve. This candle is the sell side of the curve. You have the sell side, the buy side, this fractal sell side, buy side, this larger buy side, sell side, buy side. So, I mean, I see the market structure as a whole through the lens of market maker models, but the higher time frame is looking like we are in a market maker buy model. Now we have displaced through this low and this low with bearishness. So is this the start of a sell model? Yes, it's very possible. Now, price being in this squeezed, coiled up, trapped order flow, probabilities of leaning more towards one way or the other, in my opinion, has been a little bit lower. So I can't say for certain what I actually think because the way that price has been trading the last couple days and weeks, it's been a little bit back and forth. It's been a little bit range bound, but I mean, there's still really great plays in here with sweeping liquidity. And then the inversion model is the model that I've been trading. So I was leaning bullish here because we had this good momentum, and this was right off of the equilibrium point, tapping off an hourly order block. But it looks like the draw on liquidity was the higher time frame daily suspension block to come down into and then tap off that 4-hour order block. I apologize. I do have a little bit of a cough. So coming into the morning, like I said, I was bullish, and then we ended up sweeping this liquidity, tapping off of this hourly order block, which I will delineate that here, and then we'll go down to see. So we come up, we inverse this, we do reject off of this pretty well. So let's go down to our 15-minute and kind of look at our session. I am going to take this off and higher time frame candles off. I need like a cough button on here or something. I wonder if this would work actually. Can I mute this on the bottom? Oh, I do have it. Okay, so I just got to reach over. I have my Rodecaster next to me. So, all right, awesome. Very good, very good. All right, so 15-minute time frame. So whether you use the ICT session kill zones or 90-minute cycle, 369 kind of thing, gold block. What I've been using is I have transitioned from 90-minute cycles to now I really don't use those during my actual price trading, I should say. But I kept on the Asia and then the London just to kind of see where those overnight highs and lows are. Now, if you're using the ICT kill zones, these are not accurate. So just be aware of that. Like you might want to go and look for like a search and destroy profile. Let's see. I think it's called S and D ICT. Seek and destroy, sorry. So these boxes, I'll take off my time cycles indicator. So these would be like the actual kill zones that you'd be looking for if you're interested in the ICT. So just be aware that the boxes on my chart are exclusively from what I have been looking at, and it is off of my time cycles indicator that I've made. Which all these lines for price opens, you have your 9:30 open, 8:30 news embargo lift, midnight open for ICT, 1800 for true day open. When the next daily candle starts, I got previous week high, daily high, monthly open, all those kinds of things. So those lines on here are from the indicators that I've made. Anything that you see in the chart are indicators that I have made aside from this IFEG one, which was again made by my buddy. All right. So carrying on the 15-minute here, we were taking out the overnight highs from the Asia time zone and then London, and we rejected off of this hourly order block. We also came back to this 15-minute imbalance. The tell here that I'm seeing, I was bullish going into this, and I did take a loss up here, but I was able to capitalize on this move coming down, actually on the S&P 500, and we'll pull that up as well, on a V-shaped recovery on this move right here. However, the tell for me here is that these bodies are closing just below this imbalance here, and there's this order block here that we are respecting as well. So if I put this on the order block from candle high to low, yeah, I mean, we're tapping off the consequent encroachment, and then almost like this is a rejection block that was created here, but whether you want to call it that or we're rebalancing to this inefficiency. Now it does look like there is a volume imbalance right here between these two. So technically, oh, let me backspace that. Technically, this would be all the way to here. But without that, I guess I was prompted by the bodies closing at consequent encroachment. I don't know if that's actually accurate, though, because let's take a look at the 30-minute gap. It's a lot bigger, 15. So for the way that I'm trying to develop my trading model, I would like to see a higher time frame PD array, like 15, 30, 1 hour, being delivered out of with a sweep of liquidity, and then you have an inversion. And I think I was a little bit bias drunk coming into the morning, thinking that we were going to be bullish. But let's just kind of keep walking through here. So I'm going to get rid of this. Just know that we're rejecting off of a hourly order block. We have a 15-minute imbalance here, things of that nature. We come down during the pre-market session before the 8:30 open. Do we have any data highs over here? No. And then we end up sweeping these highs, and then we have the reversal. So this would have been a nice turtle soup here. It's not something I trade, but just kind of talking my ideas out and what I'm seeing. We will go down to the 5-minute. Let me look. Zero ideas emoji awake. Oh, hey, are you watching? Hey, cool. Hey, what's up, man? Sorry, I figured no one would be watching this. That's kind of funny. Yeah, you're the only one. So thanks for being here, man. Or friend, I should say. Very cool. All right, so we're gonna keep going. If you have any questions, let me know. Put them in the chat. But yeah, I'm gonna keep going here. So we have this sweep of liquidity here at this. So the way that I do these videos, I tend to like repeat things because it helps me retrack my train of thought. So apologize if that's annoying. But we sweep the liquidity from these London 90-minute cycles, and we end up inversing here. Now, is there an inversion on the lower time frames? One other cool thing that I did want to bring up here is that this inversion was a manipulation that was kind of like coiled up during our pre-market macro here. And then during the macro, we ended up having this retracement. And then this is like a macro delivery profile for kind of sending price aggressively to the draw on liquidity, which was the daily suspension block high paired with the 4-hour order block. However, there was a bunch of these new week opening gaps that were acting as price limiters around here. So From my understanding and the ICT concepts, these new week opening gaps, new day opening gaps, and yeah, I guess that would be it here. They're price limiters. So as price comes to them, it basically is a limiter for price delivery to then kind of tell you the directional bias. So we are not displacing above here. So this was another tell that in hindsight now that I'm seeing. Um, we didn't displace above it here. We traded back below it, used it as support. Then we try one more time to sweep out this liquidity. And then we have this very large amount of trading happening back and forth here, where price is trying to choose the direction it wants to go, or I guess you could say the algorithm is choosing the direction it wants to go. And then we end up closing back below. So that was a telltale sign that we are not displacing above here. We're wicking and holding these levels and then rejecting off. So was there a solid inversion play in here? Not that I'm really seeing. I do see this here, but it's a little bit low momentum for what I'm trying to trade. So I did get chopped up on this. I tried to go long here. I got wicked out, I believe, on this candle here. But solid drop here right before this macro. So I guess the only thing I could see here, if there's a 2-minute, no, not really. Maybe a sub 1 minute, possible 30-second play. Something a little bit cleaner. I mean, you have these series of candles. That was closed below here, but that would have stopped you out. So not a really good play to start out the morning. I'm not even going to mark anything out. This was the area of inducement to trap traders long, which I got trapped, and then to short. All right, let's take a look here. As expected, no one is watching the stream, but that's not why we're doing this. Okay, so let's keep going here. Go back to our 1 minute. So we end up coming down during the 9:30 opening bell. We trade up, and then we end up coming down. We do have a breaker here, so high, low, higher, high. So this could have been a entry. Where is my breaker? And then I'll put my path tool on here. We have a high, low, higher, high, lower, low. Then you tap into that and then you go. So that would be a breaker entry if that is something that you trade. Now I look at all these patterns and I try to see them, but the main entry model I'm trying to focus on is the IFVG. All right, so we come down, then we have this retracement here for the 10 a.m. continuation. So 10 a.m. opens high, and then we end up going low. And this would be a change in the state of delivery here. So this would be like a solid order block entry or change in the state of delivery entry, or whatever you want to call it. And then we end up coming all the way down. And then we do have some good momentum here for the 1050 macro, where we close above the, I think it was the 2 or 5 minute had a decent play. Yeah, 2 minute was good. A little bit risky in my opinion. But you might get a bounce here, close above here, and then you might get like a move up to then go lower once it gets to 50%, say, of this oscillation. You know, you get a good momentum up to here, could, you know, arc over and then drop. That tends to happen a lot with these inversion plays if you have not hit your draw on liquidity. And then I believe it was the 5 minute was a little bit cleaner. Yeah, so 5 minute was a little bit cleaner. We definitely had good momentum here. However, your entry would have been a little bit higher. but stop below the low. You could probably target the high. You would go break even here. Let me put this as break even and a partial. So where the break even line would be is where when you would move your stop, and then also when moving your stop, you would have a limit here to take a partial. Um, but I believe on the S&P, I was able to get in down here. I have execution video that I'll be hopefully posting when I find some time. But I will pull over ES and we'll take a look at ES quick. Yeah, so ES had much cleaner price delivery. And this is the trade that I ended up taking. So I had here, and then it was stop below the low once this closed. So my stop was like around here. And then coming up to here, I didn't really hold very long. I took parcels off of here. I had just come off taking some losses, so I was ready to kind of be done for the day. And I'm at this like break even stage in trading, so it is what it is. I will pull the image. I believe I have a screenshot of it with the executions. Let me just pull that up. Okay. Where is my screenshots? Desktop. Anyway, I have it in my Discord. Let me just zoom up here. I apologize. Okay, here it is. Yeah, so I took it on the 5-minute here. Yep. There, stop was a little bit higher. A little bit higher. No, Discord, come back. And then we had 5 on, 4 off, just above this high here. And then 1 off, I trailed, got stopped. So I didn't end up taking it to this high. It was a little bit lower of an R play. So with that being said, that was the trade for the PM, the late morning that I took. And then I didn't take any other trades the rest of the day. I'll move ES over again. And then the rest of the day, it kind of consolidated. So yeah, those are the 2 moves that I was seeing as far as plays. The only other thing would have been if you wanted to get a continuation, just because we were, on the daily 1 hour, 4 hour, 12-hour charts, we're really like coiling up here. So this would be, in my mind, a really good place to expect there to be range trades. So that being said, we come down, bounce off of this, expecting this to retrace to equilibrium to then maybe go higher. Now, with that being said, we kind of just kept our own internal range down here in the lower half of this entire range, if that makes sense. I'll put this on here, reverse this. So we're holding below this larger parent price leg range, and then we're creating our own fractal range inside of that. But the only other move that I saw or am seeing currently that I would have possibly taken would have been a retracement down into discount at 50% of this leg to then buy this up. This would probably have been a 30-second play. And then I don't know if there were, yeah, so there was also SMT here with ES. So this would have been a solid play. I wasn't looking at the charts at the time, but let me pull over ES. And then we're looking right here. Put our line on here. So SMT ski. And then we're also at a 50% of the overall range that's been created. There's liquidity down here and below here that we did end up sweeping. So it was kind of swept here. We did have a little bit of these stacked highs here for trendline liquidity, which would be a solid target. And then this in itself becomes its own fractal market maker buy model. This is a market maker buy model. This becomes a market maker sell model, but then right around the 50% area is where the tell would be, is if you're going to bounce or if you're going to go through. We don't displace through and create imbalances. We're wicking, we're trading back and forth, and then we end up displacing above these highs to then have the right side of the curve. And then the same situation going towards the later portion of the afternoon. There was this trade over here during the PM. We'll walk through that when we get there. Sorry, this SMT was in the wrong spot here. Okay, so the SMT was actually in the PM. My apologies. Forgo what I was saying. We'll get to that in a minute. So we have not a whole lot of good momentum here, but we do inverse a couple of these 30-second gaps. Nothing clean, but if you were to get in there based off of a displacement lower, a high put in, and then a displacement through that high, you could get in there. Is there a 2-minute entry on this that looks cleaner? What about a 3? No. So the only thing that I'm seeing here is we've dipped down into discount. We do have this 5-minute gap here that gets closed above. A little bit more of a risky trade, but you do have LRLR above. And then you could target maybe just above the bodies here. One thing that I've been seeing happen on NQ lately is we won't actually sweep highs when we're in this coiled up market conditions. So normally I would think, target these highs, but what happens is we come up and then we never hit that high. So what I've been seeing is it could be beneficial to target the bodies of the candle where the volume, the bulk of the volume of trading happened during that candle's formation. And a lot of times those end up hitting, whereas if you have your full TP, it'll just get right up before it and then, run away from it. So last thing we're going to go over here is this trade during the PM. So we come down to 50% of the range. Again, we tap it. And this is happening during the 1:30 p.m. Macro, so 1350 to 1310, or 1410 rather. This is a pretty solid play here, I would say. If we go back to the 5-minute here, we do have accumulation, manipulation, distribution on a fractal scale here. I do see that we come up to a 1-minute order block. I don't think there's any, there's no gaps there. Price cycles, as far as price cycles. So this is a big figure level, so halfway between. I'll put this on. So I'll take it off live mode. I'll put the ladder on. It's going to be ugly for just a second, but you'll see. So we have our big figure levels, right? Solid, flat, 0, 0 levels, right? So we have 25,800, 25,700. Right between you have the 50 levels. So think of this as the same idea as a premium versus discount, where you have a level, 50% of the range. Same concept, just using price instead of candles, right? So we end up tapping that 50% level. So the 750 level here, we reject off of it. We dip into a discount. We change the state of delivery. We inverse, however you want to, whatever your entry criteria is. If you're doing a breaker, you could get in on a breaker down here. And none of this is financial advice. This is entertainment purposes only. There's a breaker here. You got that. So whatever entry criteria could be, it's all here. It's just a matter of price is doing the exact same things. Just how do you get in, right? So whatever model you want to use, and whatever confluences you want to stack on top of that. So again, we reject the 50% level. So the 25,750 price, we come down. We test this 700 level, we displace below, we then come up, test, and displace above, giving us indication that we might want to seek these highs, this level, or this order block on the left side of the curve. What happens? We seek that order block on the left side of the curve. There might even be a higher time frame PD array on the 15-minute here that we're delivering off of and rejecting off of. Let's go to the 30, go to the hour, 15, 5-minute. Okay, so there's another 5-minute order block here. There is this 5-minute imbalance here. So there's a couple things that we are rejecting off of, creating a rejection block-ish. No, I guess that wouldn't be considered a rejection block, but we're rejecting off of bearish PD arrays that are holding. So something to be aware of, just kind of telling myself this to help my thought process. Again, because these videos are for helping me study. So let's see. And then we end up having a very solid inversion play here. So this was a very good move. We don't necessarily sweep the highs, but we do sweep the bodies of these candles here. Yeah. So the bulk of the volume has been traded above. Now the wicks are not taken out, so that is something to kind of consider. But like I said previously, a lot of the times during these types of market conditions that I've been seeing is that price will not hit the full sweep of the wick, but it will hit a sweep of the bodies of the candles. And then we accumulate, we manipulate up during the macro time. We inverse this. This is actually pretty solid play for a short-term short here. Stop above the high. You could target, I guess anything in here, 1-to-1, 1.5. If you wanted to target something with runners, it would have gotten stopped out. This is not a trade that I took. This is just my analysis for my own study. And break even would likely be at these lows. Take a partial off there. Is that even a 1-to-1 here? So I tend to like to take the partials at a 1-to-1. So I might move to break even here, but then not take a partial till like this low here, if that makes sense. And yeah, and then that's a solid play. So there's a couple solid plays. I mean, this one is a little bit more risky, not as clear price action. There was SMT at these lows here. So if you did want to get in on some type of inversion play over there, let's look at the 2-minute. 3. Yeah, a little bit iffy on that one. I mean, yeah, there's SMT there, but it's not as clearly defined. And in the moment, I don't think that I really would have been wanting to trade this. So yeah, so that is some of the price action that I am seeing for Friday's delivery. Some of the things that I was seeing during the market, some of the things that I missed during the trading day. And yes. So I think I'm just going to end it here, keep it kind of shorter, but yeah, I'm going to hopefully do these, well, not hopefully, I'm going to be doing these live videos regularly most nights of the week to recap the session. I just didn't have time to do it last night because today is the 17th, it's Saturday. But I did want to cover Friday's delivery. So with that being said, I will end the stream here and I'll catch you guys in the next one. Peace.